we certainly are seeing things change in the Chinese market, albeit somewhat of a slowdown in the property sector has been more than compensated for in other sectors. And we're quite happy that the Chinese market in itself is maturing across new industries, EV, renewable energy, for instance. Last year alone, more than $1 trillion was invested in China in nearly 300 gigawatts of solar and wind. We see that investment continuing. So for us as Fortescue, we see the demand for greener products into the future actually improving over time as China transforms its energy profile. And for us, we recently launched our green metals project at Christmas Creek, where we will be producing a completely green metal product for the first time in our portfolio, leaving Australia's shores, going into markets which, as I said, it is hot demand for higher grade and green metals.
Yeah, can you unpack that a little bit further for us, Dino? Because for those who sort of see your company as arguably a bit less diversified than your peers as far as some of that is concerned, what you're actually doing to meet those shifting market dynamics in China with now its sort of growing appetite for things like copper and lithium and other materials for its EV and solar panel ambitions?
Sure. So up to a few years ago, we were a pure play iron ore business. We've since then grown an extensive exploration portfolio of critical minerals, including copper, rare earths in our portfolio. But I think more topical is our diversification downstream into green metal for our metals business, where we will combine the renewable energy, and through the process of combining hydrogen and iron ore, we will make a iron metal product, 95% plus, which is in, again, extremely high demand from our steel mills, because it's a product that does not use coal or any CO2 emissions in the production of green metal, which can then be produced to the final product of steel, predominantly in China, but now more so around the world.
You know, we had an outreach program in India, and we spoke to some important players in the industry who, of course, look at iron ore production as well as steel production. And the sense was that all this talk about green metal is a little bit of greenwashing. What the end user community is more focused on is really decarbonizing the process and reducing carbon emissions. And to that extent, you know, the demand for iron ore would be intact, but what would come down would be the demand for coking coal. How do you see this whole climate change emphasis by the user industry playing out in terms of the demand outlook for those commodities?
Look, it's a great question. And for us, being an iron ore player, and by 2030 we will have the world's first green iron ore, we're certainly already being approached by our customers on securing our volumes of green iron ore. And then you couple that with going downstream and making the green metal, which, as you rightly pointed out, does not require any metallurgical coal in its production, makes for a pretty enticing combination, because then you address the iron ore supply chain of carbon dioxide or carbon emissions, but then really where our focus is, for us, we call that Scope 3 emissions, which is the emissions produced in making steel. And the real prize there is that you make a commodity steel without using any metallurgical coal in its production. And you can do that with hydrogen. In fact, it's been done for many, many decades. Our challenge is to get that to an economic sweet spot. And that's where partnership with companies like us, companies out of China and India and the US, make that combination by harnessing Australia's sun and wind resources with our iron ores to make green metal here in Australia or around the world, where you have that good combination of iron ore and renewable energy, makes that, for us, we believe, the winning recipe.
Dino, just lastly and very quickly, when we talk about the market dynamics of perhaps China's iron ore appetite having peaked, and you say you are addressing perhaps some of those changes as to what it is buying now as far as its ambitions are concerned, something that we've been tracking is how India's appetite is perhaps now making up for China's, given where it is at in its infrastructure build-up.
Yes, certainly. I mean, we're very encouraged by what we're seeing in India. India's been a long-standing customer for our products. And I also credit India with their advances they're making in green industry, their green steel industry. They've made some really exciting announcements in that space. Coupled with China now, those two markets account for the majority of the steel generation in the world. So for me, the train has definitely left the station in terms of the transformation of our steel industry to go green. What we do at Fortescue is we try and take that vision and accelerate that a few notches and demonstrate that that technology to go completely green is economically viable right now. So watch this space. In the next 12 months, you'll see a facility pop out of the desert, which will demonstrate to the world that you can go green with Pilbara ores using the sun and the wind that is in abundant supply in Australia.